pensions. Let's talk about them. Hey everyone, and welcome to The Savvy Squaddie. In today's video, we'll be going over the Armed Forces pension schemes. Remember though, I am just some guy on the internet, and I'll just be covering the basics of the AFPS. If you are confused and/or want specific answers relating to your personal situation and circumstances when it comes to pensions, then seek professional advice. I have linked below in the description some websites that can help, along with all my source material and guides for each pension scheme. This is a long video and there's a lot to cover, so grab a coffee and some biscuits and let's get started. Firstly, what is a pension? A pension is a type of savings pot for use in later life, providing some financial security during retirement by means of an income. There are several types of pension schemes, but the two main types are the state pension and the workplace pension. The Armed Forces pension scheme falls under the workplace pension type. The state pension is not enough to sustain a comfortable lifestyle through retirement, so it's useful for someone to set up a private or workplace pension to increase their income during retirement. Now, if you're in the Armed Forces here in the UK, then you're already part of a workplace pension. You are automatically enrolled when you join the forces. However, you must have completed 2 years of qualifying service to be eligible for an Armed Forces pension. With most workplace pension schemes, the employee contributes part of their before-tax pay towards their pension, and in many cases the employer will also contribute towards their employees' pensions as well. For the Armed Forces, it's different. We do not have to contribute any of our own pay into our pension. Legally, all the Armed Forces pension schemes are, and always have been, non-contributory. Now, there are 3 different schemes out there for Armed Forces, 2 of which are legacy schemes. But how do you know what scheme you are on or have been a part of? Well, if you joined before the 6th of April 2005, then you would have automatically been put on the 75 scheme. If you joined the 6th of April 2005 or after, but before the 31st of March 2015, like me, then you would have automatically been put on the 05 scheme. You would also be on the 05 scheme if you had accepted an offer to transfer from the 75 scheme, but you should know this as you accepted the offer. I do apologise to anyone watching who is or was in the reserves, as I know your pension schemes were different back then. I won't be covering them in this video, but let me know in the comments below if you want me to in a future video. However, the 15 scheme encompasses both regular and reserves, and you're on the 15 scheme if you joined on or after the 1st of April 2015. If you were a part of the 75 or 05 schemes, you would have also been transferred over to the 15 scheme as well, unless you had transitional protection. This means that if on the 1st of April 2012 you had less than 10 years to serve before you reached the age of 55, you could then stay on your legacy scheme and not transfer to the 15 scheme. Now, in the recent McCloud case, the court ruled that this transitional protection was ageism and a remedy has been put in place. So, if you were in service both on or before the 31st of March 2012 and were still in service on or after the 1st of April 2015, then you will be offered a choice between the legacy and reformed schemes for any relevant period of service during the 1st of April 2015 to the 31st of March 2022. If you continue to serve after that date, it will be on the AFPS 15. If you joined after the 31st of March 2012, then you are not affected and don't need to worry about it. Equally, if you left before the 1st of April 2015, then you too are not affected, as you were never transferred over to the 15 scheme in the first place. When you are given a choice, you should be presented with statements which show you how much you will be getting depending on which scheme you pick. The Armed Forces pension calculator, linked below, will also be updated in 2022 to take into account the McCloud remedy. However, from the 1st of April 2022, anyone who remains in service will be on the 15 scheme. I have linked below a very useful, easy to read 3-page document that goes into some more detail about the McCloud remedy. I'd recommend reading it if you are an affected person. So, how are pensions calculated? Well, 15 is calculated by using a system called Career Average Revalued Earnings, or CARE. What this means is that your pension is calculated according to your average earnings over your whole career. So the quicker you promote and the longer you stay in more senior ranks, the better off your pension will be. Every year, the MOD will put 1/47th of your annual pensionable earnings into your pension pot. This pot starts growing from the first day of paid service, and it is carried forward until the following year, where it increases in line with inflation to maintain its value. This increase is known as indexation, and it is based on the Average Earnings Weekly Index. This is similar to money earning interest in a bank. This is not necessarily information you need to know, but it's always handy to have in the back of your mind and understand how things work. With the O5 scheme, it calculates your pension from your final salary. So the MOD will take 1/70th of your final annual salary and multiply that by the number of years you have served. The answer is your annual pension. With the 75 scheme, it's calculated by using your final rank and length of service. Your pay is not factored in, so two people of the same rank with the same time served could leave on the same date and have the same pension, even if one of them was earning more money due to job role or just more time in rank. Use the pension calculator, link below, to see what your pension might be when you leave. The pension that you have accumulated from the other schemes are protected and will be honoured at the time that was to be expected with that scheme. The pension calculator will break this down and show you how much you are getting from each scheme that you are a part of. To keep this video as short as I can, watch my pension calculator for Squaddies video where I go through the process of using the calculator and showing what it all means. So now we know how they're calculated. When can we claim them? With the 15 scheme, if you retire at age 60 or over, then you will be entitled to an immediate pension. As the name suggests, this will be paid to you straight after you retire. However, the majority of people, even with a full career and an extension or two, won't retire by the age of 60. So in this case, if you leave before you turn 60, you will be entitled to a deferred pension, which will be payable at state pension age. Deferred pension just means that it will be paid at a later date, not straight after you leave. With everyone living longer, by the time you retire, state pension age might be more than what it is now. Also, bear in mind that a deferred pension is not automatically paid. You must claim it between 3 to 6 months before it is due from Veterans UK. But you can claim your deferred pension at the age of 55 if you so choose. However, this will naturally decrease your monthly payments as it now has to pay out over a longer period of time. Because a full career to age 60 is quite unlikely for most people in the armed forces, the Early Departure Payment Scheme, or EDP, is there to compensate you during the time between leaving the forces and state pension age. However, this is only available to regulars and not reservists. But even if you are in the regulars, you may still not be eligible for it. As well as being a scheme to compensate people for the period between leaving the forces and state pension age, it is also there to help retain personnel in the services. It does this by only being available to those who have served at least 20 years and leave when they are 40 or over, but under 60. This is known as the 2040 EDP point. If you leave before your 20 years of qualifying service and or before you are 40 years old, then you are not eligible for EDP. EDP is not part of your pension. It is a benefit that is unique to the armed forces. And because it is a benefit and not a pension, it will stop being paid to you when you hit state pension age, but that's when your deferred pension takes over. Every year, you receive a pension statement in the post. It shows you what your current pension pot is, but also what your potential future one could be if you stay in long enough. There is a section dedicated to EDP. If you're not eligible for it yet, then it will be blank. So if you are eligible, what will you receive? When you leave, you will get a tax-free lump sum that equals 2.25 times that of your annual deferred pension. You will also receive a taxable monthly income that is worth 34% of your annual deferred pension. But what if you don't want that lump sum? You can do a thing called inverse commutation. What this will do is increase your monthly EDP income by dividing up that lump sum amongst all the payments. Bear in mind though, you are paying tax on the monthly income and not on the lump sum. So by giving up your tax-free lump sum for a higher EDP income, you may end up losing more to tax. But what if you're not eligible for EDP? Well, if you have a qualifying service of 12 years or more and left before you were eligible for EDP, then you can claim a resettlement grant. For members on the 05 and 15 scheme, it's a tax-free lump sum of just over £11,000. This can be spent on anything, doesn't have to be courses. However, if you rejoin within 31 days of leaving, then you would have to pay it back. If you join after that break and so don't have to pay it back, you will not be entitled to another resettlement grant. If you do less than 12 years, you're not entitled to it. Within that 31-day break period, you can join the reserves and not have to pay it back, unless you join the full-time reserves. Another thing to bear in mind is that there is no pension lump sum for the AFPS 15. Remember, EDP is not part of the pension, it is a benefit. So if you're not eligible for EDP and haven't done enough time to even claim the resettlement grant, then you will not get any lump sum payment from your time on the AFPS 15. But if inverse commutation is giving up your lump sum for a higher pension pot, then just plain old commutation is giving up part of your pension pot to create a lump sum. With the AFPS 15, you can create a tax-free lump sum up to 25% of your total pension benefits. The fixed rate is 12:1, so for every £1 you permanently surrender of your pension, you get £12 in return. If you want to do this, you must decide within 6 months before your pension is to be paid, and once you've submitted it, there's no going back. So make sure what is left over in your pension pot is significant enough to sustain you throughout your retirement. Now, all of that info is on the 15 scheme. Let's move on to the 05 scheme. So when it comes to when you can claim your pension, the only difference is the age. With the 05 scheme, if you leave at 55, then you can claim an immediate pension, unlike 60 with the 15 scheme. And if you leave before 55, then you still go on to a deferred pension, but it is payable at 65 instead of state pension age as it is with the 15 scheme. If you transferred from the 05 to the 15 and left before you were 55, then you will still get your pension that you have accrued from the 05 scheme paid when you turn 65, and then the 15 scheme will still be paid when you hit state pension age. With the 05, you can also claim a deferred pension at 55, but it will reduce your monthly payments due to being paid over a longer period. The 05 scheme also offers EDP benefit, but with some differences. To be eligible, you would need only have 18 years of qualifying service instead of 20, but you still need to be 40 or over when you leave. The EDP lump sum on the 05 scheme is still tax-free, but it's 3 times that of your annual deferred pension, not 2.25 times. And the EDP payments are no less than 50% of your annual deferred pension instead of 34%. Also, the period of your career that was on the 05 scheme will be linked to your final pensionable pay at the point of leaving the forces, not the salary at the time of transfer to the 15 scheme. So, if you did 4 years on the 05 scheme as a private and then 16 years on the 15 scheme and made it to W01, then the pension for those 4 years on the 05 scheme would be calculated from the pay of a W01, not a private. And finally, the resettlement grant on this scheme is the same as the 15. Now, on to the 75 scheme. This is a bit different as this is separated between officers and other ranks. So if you leave the forces at 55 or over and have done 34 years of qualifying service as an officer or 37 years as an other rank, then you are entitled to a full career immediate pension. If you leave before you're 55 and have done 16 years qualifying service as an officer or 22 years as an other rank, then you are entitled to an immediate pension. This is a proportion of the full career pension, so naturally not as much. The immediate pension is a fixed lump sum up until the age of 55, at which point it will increase taking into account the total cost of living since you left the forces. It will then increase every year in line with the Consumer Price Index or CPI, keeping it in line with inflation. Both the 05 and 15 pension schemes both increase annually in line with the CPI once the pension has started to be paid. With the immediate pension on the 75 scheme, you are also entitled to a tax-free lump sum payment of 3 times your annual pension. But what if you left the forces before you met the criteria for the immediate pension? Then you would be entitled to a deferred pension paid at pension benefit age, which is 60 if you left on or before the 6th of April 2006, or 65 if you left after that. However, if you did half of your career before the 6th of April and the other half afterwards, then you would get half of your pension at age 60 and the other half at 65. If your pension benefit age is 65, you can claim your deferred pension early at 60, but it will reduce your monthly income as it will be paid over a longer period of time. And again, just like the 05 and 15 schemes, a deferred pension must be claimed for. It is not automatic. There is no EDP scheme on the 75 scheme, but there is a resettlement grant. It is a tax-free lump sum of over £16,000 for officers and over £11,000 for other ranks. To be eligible, you must have served at least 9 years from the age of 21 as an officer, or 12 years from the age of 18 as an other rank, and also not be entitled to any immediate pension under the AFPS 75. Earlier I mentioned that in most workplace pensions the employee and employer pay into the pension pot, and even though personnel within the armed forces do not contribute to their pension scheme, they can do if they want, and by doing so, increase their pension pot and give them a higher monthly income when they retire. With the AFPS 15, it is known as added pension. This is where you can pay an extra amount into your pension pot out of your own paycheck. You can either pay a minimum of £25 per month or a £300 lump sum. The contract only lasts 1 year, so you will need to renew it every year if you want to continue. The contract year starts on the 1st of April and ends the 31st of March the following year. If you opt in halfway through the year, then you will still have to renew the contract on the 1st of April. The money comes out of your before tax pay, so it acts as a tax relief, as you are now paying less tax on your wage, and the money that you put in also increases with the CPI. There is, however, a limit on how much added pension you can purchase, and this is £6,500 in total. By increasing your annual pension pot, you are also increasing the EDP lump sum and monthly payment if you stay in long enough to be eligible for that. I will link below a form you will need to fill in to request an added pension. Print it off, fill it out and send it. With the 75 and 05 scheme, it is known as added years. This is essentially adding on extra years to your service without actually having to serve them, but they only count in the calculation of your final pension and lump sum. There is a limit on payments towards added years, and this is 15% of pensionable earnings. However, if you transferred to the AFPS 15, you can no longer purchase added years. It is now added pension for you. Now, we've covered a lot in this video, but there's stuff I have left out because this video is long enough, and I've covered what I think are the main aspects of the armed forces pension schemes. But if you do want to know about things like ill health benefits, dependent benefits in case of your death, nomination and allocation, divorce, rejoining, reservist, lifetime allowance, annual allowance, and much more, then check out the description below because I link all my sources there, and you will find out a lot more information within those links. I just couldn't fit it all in this video. So after going through all of that, you probably realise that the AFPS 15 is not as generous as the previous versions. And this was intentional because unfortunately money had to be saved and the pensions suffered a bit. And this was the same for all the public service pensions, not just ours. However, this scheme is still one of the best out there, if not the best. Have a look at this table from the Forces Pension Society. It compares our pension scheme to that of the other public sectors, and ours is better. We don't contribute to our pension, we get EDP, we get a resettlement grant, our death and service lump sum is more. So yes, it's not as good as it once was, but it's still better than what is out there. And something to think about, if you hadn't joined the armed forces, how many of you would be paying into a pension right now? Well, as of July 2021, nearly 1/5 of Brits do not have either a private or workplace pension, with the recommended pension pot being £237,000. The longer they wait, the harder it gets to save up that amount. People will get to retirement age and will have to continue to work as the state pension and benefits won't be enough to sustain them, or they'll have to sponge off their kids, thus increasing the burden on them, to which then they may not be able to pay into their pension fund because they are busy funding their parents' retirement, and so the cycle continues. So I will say it again, it may not be as good as the legacy schemes, but at least you have a pension that you don't even need to pay into, and providing that you don't leave after 4 years and actually have a career within the forces, then you'll be able to hit that recommended pension pot size easily. And you can also add to your pension as previously discussed, or set up a private pension. Watch my video on how to achieve financial independence using a military career, and if you put into practice what I show you in that video, then that right there is another stream of income for you when you retire, and it's tax-free income as well. Plus, if you leave in your early 40s after a 20-year career with an already solid pension and EDP, but then get another job and set up a workplace pension with them, then you're sorted. You will easily be able to live a very comfortable retirement and not be dependent or a burden to your kids or the government with all of these different streams of income during your retirement. And you may even be able to stop working well before you're 65 and have a lot more free time to enjoy life. You might be thinking to yourself that retirement is years away and that you don't need to worry about it, but it will come quicker than you think. So why not use those years that you have left before retirement, creating as many streams of income that you can so you and your family can live comfortably and stress-free in your later life. I've heard many people complain about the pension schemes because they don't understand it and they think it's shit. Hopefully, after watching this video though, you now understand it and realise how good it actually is. Now, I know I haven't really used any examples to help illustrate how much money one might get for doing a certain amount of years. This video is long enough as it is, But if you want to see an example and find out how you can project your own future pension earnings, then check out the Pensions Calculator for Squaddies video. This whole video is one big example and might really help you visualize and understand better how the pension works. I really hope that this video has helped shed some light on the topic of pensions for you. Please share this with your friends, especially if they think the pension's shit, and let me know down in the comments below if you're going to start adding extra to your pension. Thank you all for watching. If you liked what you just saw, please hit the subscribe button up there, and if you want to see some more videos, click over there. See you soon.